Welcome to TradeTheMBI.com. This is John. This report is for the 30th of January. And like I mentioned on the report before yesterday started with its decline, end of month, we were going to be starting to see some moves to rebalance. We were noticing that we were getting higher highs, the potential of a lower shakeout. That could actually begin right here. We also talked about the fact that whenever you get too far away from the mean of the ABM yellow, usually you get a return back to it. So none of this was a surprise. We also noticed that while we have a reset of the short-term buyers here on the DOC, breaking below the 13.5 usually results in weakness. Not to mention now we also have the orange above, and this is usually that primary warning that I tell you to look for when it comes to short, where you have the green crossing below the red. At the same time you have the orange DOC rising. So that's a critical element, particularly when it happens if the cyan is above zero, in which case it is. So the fact that we're seeing some weakness, not surprising. We kind of expected it towards the end of month, people locking in. It's a massive gain. If you've got a portfolio, you're going to lock those in to create a nice month end to start the year. I mean, it doesn't really happen that often in January, so it was a good opportunity to really seize on it. Will we likely see even further correction to the green ABM? If we start to see a little bit more movement on this, we're already down another 11 here. We could actually see the cyan cross above green, and I think that would probably begin to accelerate the move. It's not going to be anything dramatic until you see a shakeout histogram here below the 15 and also following with the yellow. So you're still having rising brown until that flattens out. Usually it's modest at this particular point. But needless to say, I pointed out even on the Skype chat that I wouldn't be afraid of shorts at this particular point. We've passed that phase of unbridled exuberance. And once it starts to fade off a little bit, usually you get a little bit more of a reactive move. Similar action here on the NASDAQ, though a little bit stronger. Apple has suffered a little bit of pullback within the general move. You know, these are going to be the things that happen when you get this dramatic. It wasn't going to continue in a straight line. That's not the way the markets work. Never have. The euro is still within its baseline. It's coming off of, quite an extreme move. The fact that you had talk of the dollar increasing, these kinds of things. A lot of this is trade related. It's also a lot of central bank stuff, and that's what we also saw from Draghi, where it was a recognition that they actually had an agreement about keeping the euro within range, which was under that 120 range, something that we had talked about for a very long time. I always had that upper line going across. I have to extend it back over here. And this is where Trump was talking about letting things run a little bit more free to actual market forces. And that's not something we've seen in years, where it's been clear that there's been central bank manipulation of the trade. And I think that's something too that we're talking about from a Fed standpoint, particularly here as it relates to even treasuries. A removal of that heavy hand of the government regulating where markets have been starting to take place a little bit. And we've known that this, from a TLT standpoint, way out of range. It should have been well below this 120 number, on its way down to that 113 or lower, particularly given the pressure on rates to rise. You're also seeing record borrowing from the federal government, which some of that's going to be related to the tax increases, and I think some of it also preparation in case of a shutdown, provide extra liquidity, so that in case there's an extended run, they have more money. I know people aren't talking about that, but I certainly think that it's in the calculus, given the incalcitrance of Democrats on working through actually creating a budget versus just these continuing resolutions. And I know that gets thick in the weeds with a lot of political stuff, but the reality is the politics moves markets because, frankly, the federal government has been greatly involved in securities and how things have been traded over the last decade. So here, oil as well, still up at the upper levels. Expect that to continue to climb. We've had a short-term weakness here with the steel dropping. Once it created this little spider, we expected to see some weakness in there. Held up pretty well. It's at least revisited the ABM, but still well above that plus 15. And it's reset, but you got to see that steel move back above the plus 13 for it to push any further. But it's been a pretty decent run. We're going to see this affect inflation. I think that's what you're seeing from the bond market. They're recognizing that these things, they're a little late to the game on it, but that's okay. We've always been ahead of the curve. That's never been a question. Gold pulling back here to the ABM, we can see that that was starting to break down earlier from back over here. Right when we formed this little move there, so we expected a return back to the ABM yellow. I don't think that the overall run for gold is done, but here's how this looks. So we started seeing this in the pre-market coming before, where we had our signals suggesting things weren't going to continue the massive run. We got the 50%, and we held along. But here's what you notice, and this is something to pay attention to. No reset here at all of the steel below the negative 13.5, regardless of the dips of the ABM green. So even while you get, not the ABM green, but the DOC, the Omega down here, where normally you get that where you then see also the step down of the orange, but you had that where you already had the crossover, where the powerful ones typically start, are where you have the orange dipping and then the green crossover at the same time, and that's where we based out here on the move back up to the 50%, and that was because we saw the highs fading, low remaining flat, usually calls for at least a move back to 50% and an attempt to get back to the highs, but zero reset here. Normally you would see the short-term buyers in the steel dip below the 13.5. Didn't happen. So we knew that there was going to be a rejection from that particular level, and at this particular point you ended up getting, DOC spread back here. You ended up with the orange moving above 13.5 as you floated around here, and then it was just a matter of time without that reset. And even when we came down to this one, again, we still hadn't seen a reset of the steel at this particular point, and that barely got close to the 50% marker and wasn't able to hold it towards the end of the day, and we went back to the lows and then cascaded in this pre-market setup. And some of this has to do with the political turmoil, because I think people are starting to recognize that, wow, there's a lot of stuff breaking as far as instability in government with the FBI situation and that, and I think there's a recognition that a lot more is to come, even though the media hasn't really covered it from a mainstream standpoint. So here's where you're expecting to get a little bit of turmoil, and I think that if we look at like Bitcoin and that, you're going to see some fluctuations back up. See, when you get that kind of instability, people are like, oh, let me go and get myself protected in somewhere else. But again, this has been in a long-term down move. This actually 30-minute chart moved it because I was still trying to see if we could get any, and there still isn't enough volume being traded on any of this stuff, and just because it's time and you can see bars, this really doesn't give you an indication of how much is being traded. Clear short signals though that came through on some of these things, so it was quite neat. But now you have the falling highs here with the flat line. I would expect that, well, it did move back up to the 50%. It's going to try and work its way up to the high level at that particular point, so we may even see, but it depends on how fast that falling fib line right there is going to catch up to it. So it still becomes a very effective gauge as to how these trade, but overall, even now, we have no reset, so I would expect that this is going to fizzle back in and probably retest those lows, maybe wait till the market's open before that happens. It's still quite a ways off. So shorting is not something to be afraid of at this particular point. I know a lot of people have been terrified of it simply because we've had such a powerful run, but it's at that point where it looks like everything's going to heaven and above is when the real players start to get rid of shares into that liquidity. And that's something that I always like to point out. And it's not a counter trade. It's like we could see it building from the readings. And that's following what the real money does, not the hype. And so you got to turn off the glory sounds of what, you hear on the news versus what the market is telling us based on our readings. So keep following the readings and makes things a lot easier. As always, though, I'll continue to put things up on Skype. Indicators will be coming out for the new month with some of the adjustments that I've been working on. A lot of it takes place underneath, but some of these are going to change with the ABM and that, particularly as it ties into your short red lines as they follow some of the Fibonacci, well, not even really Fibonacci lines, they're just basic retrace levels based off of that, but it's fun to just call it that. It makes it easier, something that people can identify with. That's something I always like to do with the indicators, whether it was the shakeout, making it look like the MACD, and that just gives you a visual representation. Same thing with the DOC, it was trying to give you an idea of more like stochastics and that, even though it's nothing to do with it. Just gives a frame of reference for those that have a technical analysis background. So, general idea on that. As always, though, I will update things as they develop. Trade well. We'll talk again later.